Okay, good morning. Good morning or afternoon, depending on wherever you are watching this podcast. My name is Kuzanai Sharara, and I'm hosting the Money and Markets podcast. And today I'm talking to Chad Marco. You introduce himself later on, but we are going to be talking about Padenga, a company that was for years involved in the breeding and selling of crocodile skins to the top end of the world markets, the luxurious markets. But over in the last couple of years, they've pivoted and they've now diversified into gold production, which they seem to be doing well. And Chad recently penned an article just talking about the strategy behind the diversification by Padenga. So Chad, before we get into the business of the day, can you just introduce yourself so that we can know whom we are talking to?
All right, thank you, Kudzi. Good morning, good afternoon. Hello from wherever you are. My name is Chad Marco. I am a partner at Baker Tilly Capital. I am a strategy consultant and management consultant who works with companies of different sizes, helping them navigate strategy issues, figure out, how to turn around their fortunes, capital source, and solve any complex business problems.
Thank you, Chad. So Padenga recently diversified, as I said earlier on, and like I said, you penned an article. And for me, the first question is: you highlighted the boldness of Padenga's move into mining. What specific risks do you think they faced, and how did they mitigate those risks?
Yeah, I think it was quite bold, for a company that we knew as a crocodile farming operation to venture out into an unrelated industry, something that is called conglomerate diversification. That was a very bold undertaking. And I think one of the biggest risks there relates to integration. When you are venturing out into an unknown territory, that you may not have the skills, expertise, and institutional knowledge required to succeed in that space. Every industry has its own rules and things that are required for a business to be able to successfully create value, deliver value, and be able to monetize. And I think when they went into that space, there was that risk, obviously, that there were chances that they would not be able to understand the industry unless if internally they had prior experience and understanding of how that industry operates. That's why I pointed out that it was a bold move. What business a company involves itself in is in the realm of strategy. Basically, strategy talks about, what business should we be in, how do we compete in that business, and how do we continue to win in that particular sector. And when you have established yourself in one line of business, to then completely navigate a different path is quite risky and a bold undertaking, in my view.
Let me take you a little bit back, Chad. So we all know Padenga being a crocodile breeder and then obviously selling the skins to the top end of the market. What do you think would have prompted them to say, look, guys, we need to diversify? Does the crocodile business, skin business, still has a future, given issues to do with the animal rights? And for me, I've been following Padenga over the years. And it's one company where I could see it, I think more than 5 years ago, I could see that there was no longer growth in terms of the number of skins that they could sell. It was like 46,000, and it doesn't grow above that. So maybe can you speak to that?
Yeah, I think even though they've been able to grow the production numbers relatively over the years, what was quite evident is that the business had reached maturity. When you look at a business life cycle and you reach maturity, you need to figure out how to extend that life cycle. And more often than not, that extension will happen through either research, innovation, and development, or you go the inorganic route through M&A. And I think for them, they made a very good decision. More often than not, industries will face significant changes. Some of them will pose an existential threat to those businesses. And sometimes some businesses don't see those changes happening. They still think that they can still milk the cow for as long as they wish. So I think for them, it was actually a great path forward to say, look, we are in an industry that has reached maturity. There are strong ethical considerations now globally when it comes to animal skin and animal fare, in relation to ESG, in relation to animal rights. And these have a significant impact in terms of demand for the product that we are producing or the commodity that we are producing. And I think they did well to start thinking of how else to extend the business life cycle. And that acquisition of Dalaglio did serve as a credible path forward in terms of extending their business life cycle.
Now, in your analysis, in your article, you compared Padenga to initial mining operations to a startup. Can you elaborate on the characteristics that led you to make that comparison?
Thank you. So I had a conversation with someone, and they were telling me that at one of the mines, they went in with open pit mining. They went in with containers, movable containers, is for staff accommodation. And I thought to myself, this is an operation that could literally go in and build infrastructure. They could spend millions of dollars, really, developing a shaft or something like that. But they sort of behaved like a startup in that they went lean, they went agile. They, literally just decided to say, we may have access to the resources, but we will operate as though we are a small business. We experiment. And so what do startups do? Startups are lean, startups are agile, startups experiment, startups build minimum viable products before they scale. They will look for a minimum viable experiment. What small little things can we do to present the facts before we scale? And I think they did that with one of their operations. So for me, it just felt like they'd taken a route of a startup. That cleanness, that agility, that ability to start small, even when they had massive capabilities to really do big on that particular mining asset that I'm referring to. So yeah, those are the things that I was referring to.
And is it something that you believe that other established companies can also do, where maybe they are venturing into new uncharted territories and operate as a startup, despite the fact that they are already an established giant in their industry?
Yes, absolutely. I think one of the biggest mistakes that big businesses often make is that when they become big, they often have the obvious bureaucracy that's required to function at that level. But that bureaucracy then often gets in the way. Whenever they want to venture into new spaces and new territories, they start thinking like a big business. Whereas when you are going into a new uncharted space, you want that agility, you want that flexibility, you want that, let me call it even humility, to know and understand that whilst you may be big in one sector, you are not big in this new space that you are getting into. And you need to humble yourself and act like a small business. And that then allows you to, one, be able to do it at a, with a cost advantage, to do it at a low cost, because you don't have to spend as much money replicating your big institutional setup in an otherwise small untested territory. So I think it will help a lot of businesses if they look at that model to say, even if we are big and we are venturing into a small or into a new unrelated territory or new uncharted territory, we don't have to carry the weight of our business and say, because we are big, we want to go big or go home. We know of businesses locally even that have gone into new uncharted territories and have tried to replicate their size into these small, into these pockets of opportunities. it's usually better to niche out than scale, regardless of whatever size your business may be. So I think that model that Padenga took is quite a great example for many, and I do hope that other businesses will start looking at that and saying, look, even if you are big, if we want to go into these new uncharted territories, this is something that is definitely worth considering. Behave like a startup when you're starting up, even if you are big.
And Padenga is obviously an offshoot of the Insco group, and we know the Insco DNA, and I think one of the proprietors of Insco, or major shareholder, Mike Fowler, is actually now heading Padenga. Do you think it's something, that DNA, that way of doing things, that culture of doing things, do you think it's something that helped them when they ventured into gold mining?
Well, I think for them, it's probably the biggest competitive differentiator and competitive advantage they have. That entrepreneurial DNA which they exhibit, not only at ownership level, not only at board level, but generally even in terms of how they hire. They have that entrepreneurial DNA. People who are able to venture out, identify opportunities, and sort of scale them. So I think it did quite help. And I feel that any business that exudes that entrepreneurial DNA is bound to have that agility that we were mentioning earlier on, is bound to be able to see a potential wherever it exists, whether that potential exists in an industry that they know, or it exists outside the usual industries that they would ordinarily be active in as a business. So I think that did really help them. Just that entrepreneurial DNA as it exists across, if you see any business that are related to them, you just see there's something unique in terms of how they move. They move aggressively, they move with speed, they're not afraid to experiment, they're not afraid to try new things. They're also not afraid to even acquire relatively smaller businesses. A lot of times you find that with big businesses, especially in Zimbabwe, when there is a small business out there that could be acquired to advance a certain strategic agenda, most of them would rather start one to outmuscle it out of that particular industry. But I see it with these guys; they're not afraid to acquire. I mean, even sometimes some very small and obscure businesses that you wonder how did they actually value this opportunity? Sometimes. And yeah, so I think that entrepreneurial acumen is needed, especially in this VUCA environment that we operate in.
So maybe my last question, Chad, Padenga, when you look at the crocodile side of things and you look at the mining side of things, totally different kind of businesses. Do you see any synergies between the two businesses? And what do you think is the future of the crocodile business? And probably also, how do you think they should proceed if they are to keep the same businesses under one holding company?
Yeah, I think it's quite interesting considering how the revenue mix has shifted. I think the mining side of things now accounts maybe for what, over 80,
more than 70. Yeah, 76,
more than 70,
yeah.
70, 80 or so of their earnings, which speaks to the fact that the mining now is actually the main business. So I don't know about their interest in continuing with the crocodile space. I think there are sentimental issues, obviously. When you have started with a certain business, you have this sentiment where you feel connected to it, you want to continue. But I think it's an industry that has reached maturity, in my view. And unless if probably they are thinking of going up the value chain, I think it's an industry that has sort of reached maturity. There's been a lot of change and transformation that has gone on. They talk about FAUX. I don't know how to pronounce the word leather, which is more like synthetic leather, and it's become a thing. And
yes.
I mean, we are seeing a lot of lab manufactured, from lab manufactured pearls back in the 60s. Now we are at a point where lab manufactured diamonds are almost reaching parity with diamonds that you mine from some of these diamond mines. And I think the same thing is happening also in the leather industry. Because of ethical considerations, people are harvesting plastic waste from the ocean to make your premium shoes and things like that. So I think there's definitely a change in terms of the global dynamics in that particular industry. So I don't know what their interest is. I haven't looked at the numbers latest to be able to sufficiently or posture an informed feedback in relation to that. But I do think that they are now effectively a mining business. And I mean, if their acquisitions and activity over the past few years are anything to go by, they've actually deepened their involvement in that particular sector by acquiring more mining assets. And so I think mining is now here to stay. The crocodile business is now, it's now the fringe. The main business is now mining, and crocodile is now a fringe business. At some point in time, maybe they may have to consider disposing of it so that they can actually focus on the mining side of operations. And as we know, gold is on a rally, and I think it will be for the next couple of years. So I think they will enjoy, for as long as they can keep their mining operations efficient, I think they will enjoy relative success over the next couple of years.
Thanks, Chad. So that was Chad Marco. He speaks strategy, he speaks startups, he speaks pivoting. I know that word, you use it quite a lot. And today he was talking about the Padenga diversification into mining from crocodile skin selling kind of business, but now into mining. And as he said, it's now a mining company. It's no longer into, well, you can no longer say that it is an agriculture related kind of company. And thank you so much, Chad, for taking your time to just speak strategy with regards to the Padenga diversification. And this podcast is the Money and Markets podcast, and we hope to bring you more of this podcast where we speak about Zimbabwean companies and the directions that they should be taking going forward as we try and grow our economy. And my name is Kuzanai Sharara. It's bye-bye for now.
Thank you so much, Chris. Cheers.
Thank you, Chad. Bye.